Hello, what's up everybody? Today we're going to learn about unicorn trading model. Why do we call it unicorn in the first place? Because unicorn is rare and this occurrence is rare too. It happens once in a while, but when it happens, it is a high probability trade. So today I'm going to teach you how you can spot this and how you can trade this. Before we begin, I want you to understand that you should understand these terms. And if you don't understand, you wouldn't be able to understand what I'm talking about. All right. So if you don't understand any of these terms, go to those videos, learn that first, and then come back to this video to understand this model. Right. So you should understand what an order block is, what a breaker block is, what is a fair value gap, balanced price range, PDRA, and a market structure shift. This unicorn trading model is to just tie them all together into a trading model, which you can use for trading scalp trades specifically. Like you can use it on any time frame, but I specifically use it on the scalp trading because I think this is the best strategy for scalp trading, especially during silver bullet New York time. All right. I'll show you an example on the chart, but right now let's get into it and try to understand what is it, right? So this helps you make an entry into the positions, right? If you are not entering at the right time, you may have to give wide stop losses, right? So that is a little bit stressful. This helps you get into positions at the right time, and you don't have to give too much wiggle room if you're getting in at the right time, right? And what is it? This is an overlap of breaker block and fair value gap or balanced price range. I'll show that when I go to the chart, you'll understand that better. Just understand this is an overlap of breaker block and fair value gap together. So when you make an entry in this area, it is a high probability trade. So what do? First of all, you should mark a PDRA. That is a higher time frame. We talked about PDRA early this week, right? We talked about open and close and a bunch of other things that we consider PDRA on the higher time frame, right? So you should mark that out, and then you have to wait for it to bounce off of it, and then you have to wait for a market structure shift, and then wait for a breaker block and identify fair value gap or balanced price range and align it with higher time frame, and then align it with the kill zones as in 10 a.m. or 3 p.m. We have different time zones that we particularly trade, right? So this works very good at 10 a.m. If this occurs at 10 a.m., this is 100% a confirmed entry, right? So where do you take profits? Usually we do 1 to 2 risk reward, and I'll show that in the chart. It works on any time frame. So let's dive into the chart and try to understand what's going on, right? So if you see this chart, this is a 3-minute chart, by the way. I turned on this indicator just so you understand what is going on with the market structure. See, as you can see, this is making higher high and then higher low, lower low. Then it started going in a downtrend, right? So this is what is happening right now. It is in a downtrend. And this is where it shifted. So where did we have the market structure shift? So that is our first step, remember? And you identify the market structure shift. And this is your PDRA. That is higher time frame support. And this is where it bounced. It bounced off of here and it made a market structure shift here. So this is your breaker block. So here, this was an order block, and this is where it, and here, if you're not sure of it, just turn on this indicator. It shows you where the breaker block is. Sorry, here it is. You have a breaker block and a fair value gap. See? So here it came to this PDRA. Support. And then here it bounced off of here. And here you have a market structure shift. Yeah. And here, see, this is a breaker block. This was an order block. It was disrespected. And also there is a fair value gap that is over. Let's see here, there is a fair value gap, but there is no order block or breaker block. If you want to know where the order blocks are, they are here, right? So here there is a breaker block and it overlaps with the fair value gap. When you make an entry here and target the previous high, you can place your stop loss. Ideally it should be here, and but you can place right below the candle where the fair value gap and the breaker block happened here. So you make an entry here, you keep a stop loss here. Ideally it should be here. Typically that's what I do. I keep it below the candle where the fair value gap is three candles, right? 1, 2, 3. These three form the fair value gap. So I like to keep it here because sometimes in a day where the news is released, it typically tends to be very volatile and it swings wide, and it is really hard to catch a move without being stopped out, right? Like what happened yesterday. So you have to give it a little bit wiggle room, and you keep it here and you target the previous high. And this is it's not 1:2, it's 1:1. Typically, according to the rule, you keep the stop loss here below the candle. So in that case, it is 1:2, right? But I like to give it a little bit wiggle room. So here, this is what it is. So it hits, right? So it is a confirmed entry. If you go back and find breaker blocks on a higher time frame, let's see if we see any breaker blocks. I think it doesn't show. Maybe let's try and cut it. Okay, there you go. Here you have a breaker block. But here you see there is a breaker block, and here you have a fair value gap overlap, and when it came, it dumped perfectly, right? You keep your stop loss above this candle and you target here, and it worked, right? So if you keep the stop loss above this, it wouldn't work. You'll get stopped out. That's why I keep it here above the fair value gap, and it worked. Let's go back and see on a different time frame. Let's see 4 hour. Here there is a breaker block, but there is no fair value gap inside that. So let's go to daily. Yeah, here there is a breaker block and also a fair value gap. When it comes here, it's gonna dump harder, right? When is it gonna come? Right now we are in a short position, but it's not gonna come here. We're talking about end of this month. I told you by end of this month you should exit everything, right? This is another example. See, it's gonna come here. When it comes here, it's over. This is a high probability setup. When breaker block and fair value gap overlaps, that's gonna be the end. It's gonna dump harder, like this hard. All right, so be careful. Oh, what am I talking about? This is an old chart. So let's replay that. Oh, you'll understand that. See that? So when this is a high probability setup on any time frame, when it hits, it's over. It dumps. It dumped about when it touched. to 35%, right? So on any time frame, this is a high probability setup. Breaker block and this one, fair value gap overlapping, is a high probability setup. All right, keep that in mind. And that's it. You can use it on any time frame. You can use it on 1 minute, 3 minute, or any time frame. It works on any time frame. I use it specifically on the scalp trading, and you should try. It definitely works. All right. Thank you so much for listening, and have a good night. Bye.